Yeah, a lot of great questions. I mean, I am constructively cautious with the price of oil, and I have been for the past 3 months. It's been hard to be straight out short the price just because the demand has overwhelmed. I mean, I'm dead wrong with demand. It's not. It's exceeded expectations for the end of 2017. However, you have to keep in mind that PMIs, at least a few of them, have moderated a little bit. That's going to have something to do with it. And you're right, the report that came out today that shale is supposed to be increased in the U.S. by 131,000 barrels a day. That's going to add, 6.5 million barrels a day. But what concerns me about that, though, is that inventories aren't rising in consummate. So the question mark, one I can't answer right now, is that where is that oil going? I mean, they have producing more shale, but the inventories definitely aren't rising in parallel. So be interesting to see. I still think that it's hugely correlated to the growth metrics that we're seeing. And so with that said, I do believe that oil will slowly and surely make its way back down another $3 to $5 a barrel by the end of the year.
Let's talk a little bit more about the iron ore price. And obviously we talk about that strong global demand story. We talk about inventories at those Chinese ports as well. Not necessarily excessive at this point, but maybe high enough for the market to start taking a little bit of notice there. What are you making of the iron ore price and perhaps how demand might play into the iron ore story throughout 2018?
Yeah, like right now, I think sentiment is trumping fundamentals in the market and is kind of holding the market up. I do know that, the iron ore is down about 5% in the last 5 to 7 trading days, but overall, it's pretty healthy. Consensus continues to say that the price is going to be 10 to 15% lower by year end. I still don't buy that. I'm still happy to remain as an outlier. I mean, I do know right now that steel inventories are very, very high. I also know that iron ore port inventories in China are marginally high, but I do believe the story in China is still strong. Everybody is making money at this point. Profit margins are good. That's calling for higher grade iron ore. I'm off consensus. I'm off the grid, and I do believe that the price will stay pretty healthy through the end of the year.
Larry, let's move away from commodities towards economic fundamentals, and I'd like to just get your take on that CPI read, that inflation read today. We did see it coming through and perhaps easing some concerns about rising inflation, I should say, a growth of 0.2% in the month there. Do you think that might put the Fed, though, in a difficult position as they embark on a more aggressive rate hike cycle as they head into that meeting next week?
Good question. I do believe that we can handle the dots that are forecasted for this year, raising 1 for 2019. I think the market can absorb that as well. But to raise dot forecast 1 for 2018, I think that would be trouble for the market. I also don't think that's going to happen, so I'm not overly concerned with it. When you look at the CPI number from today, also the wages number from last Friday, that put the bond bears to sleep once again. 10-year yields have come off a little bit. I still think that 3% level in the U.S. anyway is a big barrier. I could see 3.25, but I don't see anything higher than that. So with that said, the FOMC meeting is the next big catalyst that everybody's going to be worried about. I think, again, it's more about the dot forecast, and I'm pretty sure that the market won't be able to handle an additional dot in 2018.